Good morning, everybody, and welcome to the Hardcore Mortgage Real Estate and Business Podcast for today, April 6th, 2022. Always brought to you by Capital Mortgage Funding, powered by Fairway Independent Mortgage Corporation, Equal Housing Lender. 2289 is our NMLS number. So, everybody, this morning, Wednesday, here we are. We're in April, rolling right to the end of the first week in April. I have with me on our show today, on our podcast today, Miss Becky Alley. Good morning, Becky.
Hey, what's up, Facebook land and our avid podcast followers?
Woo! Yeah, Becky, top 1% of all originators in the United States of America. Mr. John Kolb, he is also a top 1%er. Hi, John. Good morning.
Good morning. How's everyone today?
Everybody is doing well. And last but certainly not least, those with the most hardcore mortgage real estate and business show in our 22nd year on 97.1 FM here in Detroit, Mr. Harvey Free. Good morning, Harvey.
Morning, everybody.
All right. So just to recap our hardcore mortgage real estate and business show, last Saturday morning, we had Amy Ruff from eXp Realty. Not only is she a real estate agent, and if you go back, you got to really listen to what she had to say. Her knowledge is really unsurpassed. She also trains all the realtors in the XP offices downriver. And Becky, I thought, she was a tremendous guest and brought a lot of knowledge, enthusiasm, passion, and energy to what she does for a living. And we were lucky to secure her as a guest, right?
Oh my God. Yeah. Like if you haven't, listened to our radio show from this past Saturday, you need to go back and listen to it. Amy Rupp is literally a walking beacon of knowledge, energy, and she's an overall good person, right? And so, she's training the people that are in, she's a part of the Michelle Sayward team. They have a stellar group down there and they're branching out all over the place. And I'm proud to be affiliated with that association.
Well, we try to bring on the show, like we do on the podcast, people that are going to add value, right? So we want to add value to the informational process, John Kolb, that is out there in the mortgage world, because too many times, and now especially, right, there is activity in the market. It's a different kind of activity, but people are in panic mode right now because of the inventory situation. But John, you first. Education is the key, and there's just so many things that people now need to consider in this very, very active market.
Yeah, I mean, you need to make sure you get yourself with somebody who has knowledge of the ups and downs of a market. I mean, on the last radio show that we did with one of my guests, we talked about agents that are out there with no idea what they're doing, and we're having to coach them through how to get a transaction done, and that's just part of what happens in a market where the rates go down so quickly. Everybody jumps in thinking they're going to make so much money. But right now, when rates are going to be increasing, it's when you got to get with your seasoned professionals on what's going on, what's happening, what to expect, what is the trends and history have told us in the past, and make sure that you are dealing with somebody who's been through this before. I mean, gosh, I couldn't imagine if you were with somebody who's never been in mortgages where rates are above 4%. That would just be, idiotic. But that's just my take.
Yeah. Hey, Harvey, it is busy. And speaking of experience, over 30 years in the mortgage banking industry, Harvey, it is busy. There is activity out there, but it's a different kind of activity, right?
Yeah. Today's marketplace really requires that professional team that we've always stressed. The activity that's out there is overwhelming on the houses that are in moving condition. You'll find a little bit slower marketplace in the houses that are banged up a little bit, as most of the first-time home buyers don't have a whole lot of extra money to fix up a house and pay for that overappraised asking price. So different market. The last 2 years were really different. And I think 2022 is going to be different than the last couple years. John Kolb sent out a nice piece of literature this morning, talk about who might actually benefit from these higher interest rates in today's marketplace. So I think maybe we can get into that a little bit, and it might just put off a little bit of the buyers out there, creating less competition for the low inventory that you're going to see this spring and summer.
Yeah, we'll get into that a little bit later. But right now, Becky Alley, economists say that this year will be a continuation of what is happening now. What that means is last year in 2020 in the mortgage industry and the real estate industry, it was that 2-year period of time was an anomaly. COVID period, nobody knew what the direction was going to go. The Fed eased rates to all-time lows, 0, 0, 0, everything. People thought that was going to be around forever and ever and ever. But economists now say that right now, 2022, April 6th, what is going on right now is going to be a continuation into the latter part of 2022. Specifically, Becky, inventory lacking right now will continue. But how low can it go? Uptick in rates will continue. How high are they going to go? And what will the net effect be in your thought process? What is your thoughts? What are your thoughts on that?
Okay. I mean, so you got to understand, I mean, everyone has saw double-digit appreciation in their homes over the last 2 years. Okay. That's not a secret. You can look it up, right? You're looking at 20% across the board. And even just the month of February alone was another 20% increase because of these influx of people that are entering the market, regardless of the rates, because true to human nature, we talk about this all the time. You can tell someone that the rates are going to go up and they need to get in the market, but what do? They sit on the sidelines. They wait till after the fact, right? When it's time, it's almost like a stock, right? When the stock is plummeting, they decide they're going to all of a sudden sell it. Well, you missed the opportunity because now you're losing money, right? So now here we are where people are getting into the market regardless of the rates, and it is increasing the home prices even more so because people are in desperation. Rents are going up. Everything's going up, right? So these rates are going to be a little bit higher than what we're seeing right now. The unfortunate part is like the original predictions we're going to see 4.875 by the end of this year, early 2023. And we saw that within 30 days of them even just talking about it, right? So ideally, we're hoping to see a little bit of some stability in the market with the rates. We're definitely going to see your top tier credit in the 5s easy. We're seeing that now, obviously, and points are going to be in vogue and all that stuff. So they are attempting to slow down the buyer's market right now. That's obviously what they're doing. They're trying to flip it to some capacity. So therefore, it is a little bit easier for these people, to buy homes, because it's really difficult, as we all know, to compete with yourselves, these other buyers, as far as as far as the rates going up, and you have to come up with 10, at least to 5 to 10,000 to say that you're going to bridge this appraisal gap, because the market knows that these houses are being priced out above what they're currently valued at, right? And we can get into that whole aspect of we're not going to see a housing bubble. This is a totally different animal than 2008-9. We're going to talk about that later as well, but right now, you have to be strategic. You have to be with seasoned professionals, and you can't be out here playing anymore. You got to be in here guns a-blazing. And if it's the first house you like, you got to throw a rock and see if it lands.
Yeah, there's total agreement with that. And John, economists are saying that this year will be a continuation of what is going on now. Okay. Your thought on that? I've got my thoughts, which I'll wrap that up, but inventory is lacking. How low can it go? There's much less than a 30-day supply of homes on the market. I mean, what's the net effect going to be for the remainder of the summer and into the fall?
I mean, we're going to see the continuation of the same. I mean, it's increased interest rates, people out there looking for homes, not enough on the market. I mean, it's just it's going to be status quo. And we're just going to have to deal with it. Some of the bullet points of the article that we talked about earlier this morning, which we'll address in a little bit, is that maybe that will help open up where some people won't be available or have the option of purchasing now that rates are on the rise, and it opens up the market a little bit. So, but we'll get into that. So, what's to come? Status quo. They're going to increase interest rates, and we'll see interest rates, probably in the mid 5s.
Yeah, I would say I would tend to agree with that. Nobody wants to hear me say they're going to go higher, because we are 1-800 low rate. Capital Mortgage Funding, 1-800 low rate, the best mortgage banker, but rates are going to go up. We might as well get into it now. It seems to be a hot topic. I don't understand this. I'm just going to throw my 2 cents in there. Could higher rates be a blessing in disguise? When is it going to be a blessing? I mean, when? Not sure how this is a good thing. My thoughts are What do you mean? Slowing down the rise in prices? I don't get that. It's really a supply and demand issue, Harvey Freed. If there's less of a supply and the demand is high, but the rates go up, how is that a good thing? Because the prices are going to stay high. So when is this going to be a good thing? Are more new homes going to come on the market? Not yet. What? So who would write this is a good thing? Are they talking about in 3 years from now? In 5 years from now? It is certainly not a good thing right now. And before I jump through the screen at whoever wrote this article, please explain to me, panel, Harvey, Becky, and John, when is this going to be a good thing in the next week, 10 days, 2 months, 3 months? Tell me when this is going to be a good thing.
I'll give you a little bit of insight from my perspective would be that a balanced real estate market has always been a healthier market, a good supply of sellers and buyers. So the interest rates, yeah, they've gone up. Okay. So there's an opportunity now where buyers want to get into homes due to the fact that rents have gone through the roof. Some people might double check it. Look, if you can afford the home at 5% or 5.5%, you're still going to be out there looking and making offers on real estate. But it might slow down where some of the buyers were a little bit priced out of the marketplace, making it maybe a little bit easier for some first-time home buyers. I don't know. Is it ever a good thing? I think a balanced market and not anything that's so drastic one way or the other is good for real estate.
Becky, talk me off the ledge, because Harvey certainly didn't come with any strong points. He said a balanced market, but we're not in a balanced market. I'm telling you, we are exceeding any type of balance right now. Becky, talk me off the ledge, please.
I mean, the reality is that they're stepping in and they're doing too much too late, right? So we didn't have enough inventory. So now you're coupling that with these rates and it's affecting the price of homes everywhere, right? So then now you have these investors that were gobbling up properties over all these years that are now really being able to take advantage of this market for people that are all of a sudden being scared to purchase the homes. That rates being where they're at right now, I don't really see how that's going to be beneficial for everyone, because it's not going to stop this market from increasing, right? And we're not going to lose buyers per se. It's just changing their price point. And the issue that I'm seeing is I am talking to buyers where they are talking to other lenders and they are not telling them what their payments are. So here they are 60 days into looking for a house. They finally have a house and all of a sudden someone's dropping a $1,600 payment on them or a $2,500 payment on them for a $250 house. And that's the problem, right? They're not working with people that are comfortable or confident enough to have these tough conversations. So like Capital Mortgage Funding. Hey, look, I just had to talk to someone. They were literally pre-approved for $250. I told them what the payment's going to be. And I said, you know what? I think we should back this down to $200,000 price point. This is going to be your payment. Are you comfortable with this? And the answer was yes. I think I am more comfortable with that payment. So it's going to be a constant, evolving, changing situation because there's a lot of cash out there. There's a lot of cash being slung all around the place. And the buyers are assuming the risk, not the lender. And these are now becoming bona fide comps. If someone's paying $40,000 over asking and giving their firstborn child, that's now a comp that we're going to see on appraisal going forward. And it's pushing this market up. It's not what we saw in the financial crisis, 2008, 9, 10. It's literally completely different animals. And, but as far as the rates are concerned, I think it's too much, too fast. And it's squeezing the wrong people out.
All right, Becky, you're helping me calm down a little bit better. It's certainly helping with the conversation and talking reality. I'm an American consumer, right? John Kolb, I want what I want, and I want it now. It can't be a good thing for me that I can't find a house. It can't be a good thing for me that the prices go up, and it certainly can't be a good thing that higher rates are going to be a blessing in disguise. If somebody tells me and they talk turkey with me and they just give me the reality of the situation, John Kolb, I'm better with that than somebody coming out and telling me and blowing smoke up my you-know-what and telling me it's a blessing in disguise, John.
Well, here, I got a couple things I got to get off my chest here. Opinions are like pie holes. Everybody's got one, right? So this guy who wrote this article, and I cleaned that up for you, Harry, by the way.
Thank you, Poppycock.
Poppycock. This guy that wrote the article, that's his opinion. And now, do I see some merit behind it? I do, because otherwise I wouldn't have sent it off to you and Harvey. Now, what do I see that might make sense is that, yeah, you've got some of the people out there that are out there just looking for higher priced homes because rates were in the 2s and 3s. You're getting rid of those people. So now the market's opened up a little bit, maybe for some others. What I like to see beyond the words in the paper, because I'm like Bobby Fischer, and I see a couple moves down the road, Harry, is that this gets rid of a lot of the BS lenders out there that don't know what they're doing. You know, higher rates, like we talked about when this segment first opened, higher rates means that the people who have only been in this industry when rates were in the 2s and 3s have no idea what they're doing. They're going to wash out, and we're going to be around to clean up the messes. And I'm okay with that because I've done it before. I'll do it again. I'm here to help. So higher rates, what does that mean? Get rid of the BS lenders out there that don't know what they're doing, the broker pop-up shops that are as prevalent as Christmas pop-up tents. And then, yeah, maybe it gets rid of some of the bars. I've said this since the get-go. If you can't afford a home at 4% and only at 2.5%, you probably shouldn't be buying a home. And
all right, well, John, I like that. I like that approach better. And Harvey, I'm going to go to you on this one. And I have an answer for this that I'm going to see if I can get the right answer out of somebody here. Okay. Right. Rates. How high before they become a problem? I have my thoughts on that. And how high before they become a problem? And why don't you guys tell me, and then I'll share my thoughts.
I'm going to say it'll slow down the housing market when they get 7 or 8%. If you do the math, that would make it where it would still be reasonable to consider renting. So that would definitely slow down the marketplace. So if you slow down the entry-level homes, those families that are selling those won't have as many buyers or net as much money to then buy the step-up house. Subsequently, that would put a little bit slower purchase appreciation, slower appreciation than that 15 to 20% we saw the last 2 years.
All right, excellent. Becky, your opinion, and again, this is only my opinion. You can't be right or wrong with an opinion, but you certainly want to bring an informed take on it. Becky, tell me, rates, how high before they become a problem?
I don't know. It's like my dad said, back in my day, the rate was 9% and I paid it and I liked it because I wanted a house, right? So the bottom line is that people are going to pay higher rates because it's really not an option, right? The playing field's been leveled, right? So it's no matter of you call us, you call someone else, you're going to get pretty much the same rate because everyone's in that same kind of panic mode as far as adjusting to this ever evolving volatile rate market that we're seeing, right? Where the issue is going to be coming from is that your starter homes are now, you know, like what you could get for 150 versus what you can get now for 150,000 are two different things. So it's just going to adjust the, you know, what someone's looking for in a house right now. It's not a matter of it's going to price them out, but someone that was pre-approved, like John was saying, you know, early part of the year or later part of last year for 250, right, with a lower interest rate, you know, they're now looking at a $200,000 home, and you can get a lot of house still for $200,000. You know, the issue is that there's just a lot of cash floating around, and it's driving these houses up. But the rates is going to slow it down. I do agree that we're probably going to see more closer to a 5%, 6%, maybe 10 max appreciation. But either way, we're still in an appreciating market. We're not driving leases off a lot and depreciating. We're in appreciating assets right now, for sure, for the foreseeable future.
I love that answer. And I love the fact that your dad said 9%. Hey, we liked it. We paid it and we liked it.
You might not have liked it, but he paid it.
Right, John. And it worked out, right? John Kolb, what about you? Rates how high before they become, the key word is a problem?
I'm 6%. I think that's a ceiling that we don't want to cross. That's my opinion.
All right.
My first house was 6.25.
Well, I'm going to give you guys a little perspective on that. I'm going to say that I believe that rates are not going to become a problem. I believe people are going to pay and like it, whatever the rates are going to be. People bought homes, ladies and gentlemen, in the 1980s when rates were 18%. They certainly never stopped the housing market then. If gas was $10 a gallon, people would pay it. Maybe they wouldn't like it, but they wouldn't stop buying gas. So, from my perspective, maybe it's because, John, I am the oldest one on the podcast. Life never stopped at 18%. It's not going to stop at 6%. As a matter of fact, I'll make you guys a deal. The sooner it gets to 6%, the better we are.
Wait. You're changing this as you always do. You're changing where the conversation goes. You asked
rates how high before they become a problem. I'm saying they're not going to be a problem.
Problem versus life stopping. You just said life is not going to stop people. So if gas is at $10 a gallon, they may not stop buying gas, but you may not go up north as often. You may not drive to Florida as often because you don't want to pay that. So it's life altering, but not life stopping. And life altering is a problem.
It's perspective. And the perspective is this, is that for me, in my opinion, the sooner we get to 6%, the better we all are, because everybody will stop speculating. My opinion is that no matter where the rates are, people are going to buy homes. That's my perspective. Okay. Last subject before we have to get off. We're brought to you by Capital Mortgage Funding, powered by Fairway Independent Mortgage Corporation. The show is produced and directed by none other than Roberto Beauchene. He's in the booth right now. He's behind the curtain. Ladies and gentlemen, start with you, Becky Alley. Give me something good. Give me some real life buyer and seller experiences. Closing this week. You tell me what's going on.
There's still success stories out there, right? So when we're on this podcast, right, it's not to deter or panic, right? If you really listen to what we're saying, it's really about finding those solutions. And we've all have been a part of a tough market, every single one of us on here, right? And, anyone can sell, ice cream on a hot day, right? But when you're trying to sell ice cream on a cold day, it's going to be a little bit more difficult, right? But at the same time, like we're here, we're not selling anything. We're here to help you. And you can get your offers accepted, and people are getting offers accepted with FHA, with concessions. You don't have to have $1 million in the bank. If you're working with a realtor that is hesitant to take you out because you don't qualify for a down payment assistance program and you need some concessions, then maybe you need to reevaluate the professional that you're working with, because any seasoned professional is not afraid of anything. They're going to advise their client and they're going to help them the best way. So I have two.
Oh, frozen.
Closing
frozen.
tomorrow.
There
Actually,
she is.
One's with concessions, one's not with concessions. Yeah. Oh, sorry. So I have two closing tomorrow. One's with concessions, one's not with concessions. Done all within 30 days, before 30 days actually, and everyone's going to be happy. I had someone selling a house and buying at the same time. They were contingent. Oh my gosh, and their offer was accepted. I mean, so don't be afraid. It might take a couple offers, but the right one is going to land, and you're going to be happy. And homeowner.
I love it, Becky. You froze up, but your perspective is always good. John Cole, let's go to you, buddy.
So I just, everybody, I want you to know there's nothing but love on this podcast, but no podcast is good without some controversy. So I'm Harvey. I'm going to call Harry out a little bit again. He called the article that I forwarded this morning. I think he said moronic, that why would higher interest rates be a good thing? But then he ended his last eulogy with the sooner that we get to 6%, the better we are. So okay. I'm just saying, different versions coming across. But hey, everyone, just make sure you're using a good lender, good realtor. Make sure you're using somebody like Harry Glanz, Harvey Freed, Becky Alley, Lisa Lawson, everybody at Capital, so that they know that we're getting you into the best position and doing the right thing for you. We just treat you like we would our own family. Well, at least I will. Harvey not.
Like that, I might not. Hey, let me jump in real quick, Harry. Here, I'm reviewing a closing that's going down tomorrow from a competitor. I don't know if they're a competitor. This girl is the only purchaser ever to pay her upfront MIP and pay 2 points on an FHA transaction. This is when you deal with people that have no experience in the mortgage industry. If the NMLS number starts over 2 million, you better run. This is a disaster on how a family is going to waste over $6,000 and close tomorrow by dealing with no experience, and she's a brand new agent. And now that she knows all about it, it's a complete disaster. I wish her good luck. I'm going to have to call her and give her the bad news. She
All right,
knows about-
thanks, Harvey. And we're going to do a little fact checking, Roberto, before we get off the air. First of all, John, it wasn't a eulogy, it was a soliloquy. That's number
Oh,
one.
I like that.
Number
Soliloquy.
two, the question was rates, how high before they became a problem? I said if they go to 6% really soon, I don't see that as a problem. So I don't know how you misinterpreted that, but that's okay. We can fact check all that. But the good news is, everybody, is that my suggestion for everybody and my example for the day is I can't tell you how many realtor partners have called us and said, in the multiple offers that we see, that when an approval letter comes attached to an offer with a buyer from Capital Mortgage Funding, they have the confidence in knowing the transaction is going to be completed in an efficient and timely manner. So they are going to take the approval from Capital Mortgage Funding more seriously. Also, a little bit of a success story. Offer written on March 6th, was accepted on March 7th. We got it approved 3 days later. They didn't want to close early, so they're closing 30 days later, which will be on Friday, April 8th. So a little bit of a success story there. All I'm telling everybody, and what with Harvey, Lisa Lawson, John Kolb, Becky Alley will tell you on the podcast and on the radio show, you got to pick your team up front and plan for the transaction. There is activity out there. It is busy out there. Rates are going to go up. Rates will not be a problem. Inventory is the issue, not mortgage rates. So for Becky Alley, John Kolb, Harvey Freed, Roberto Beauchene in the booth, this has been Harry Gland's Hardcore Mortgage Real Estate and Business Podcast, Wednesday, April 6th, everybody. We'll see you on the radio show coming up this Saturday, but check out our video that we post on Facebook. We'll see everybody soon.